Your money-making broadcast starts now. It is Wednesday, April 29th, and the S&P 500 closed essentially flat today, but don't let that fool you. Beneath the surface, a storm is brewing. Kevin Warsh just cleared the Senate Banking Committee, moving one step closer to becoming the next Fed chair. Oil is surging toward $110 a barrel with Brent already at $120, and the VIX spiked 5.5% as investors grapple with a word we haven't heard in decades, stagflation. I'm Chloe, and this is your Market Close. The S&P 500 finished at 7,135.95, down just 3 basis points. The NASDAQ was flat at 24,673.24. The Dow Jones slipped 0.5% to 48,861.81. But the real action was in the fear gauge. The VIX jumped 5.5% to 18.81. Oil was the big mover, with WTI crude closing at $107.11, up nearly 7% on the day. Gold held steady at $4,568.50. The 10-year Treasury yield ticked up to 4.42%, and the US dollar index sat at 98.83. Bitcoin slipped 0.5% to $76,084. Let's dive into the biggest story that will shape markets for months to come. The Senate Banking Committee voted today along party lines to confirm Kevin Warsh as the next chairman of the Federal Reserve, sending his nomination to the full Senate for a final vote. He is known as an inflation hawk, someone who prioritizes fighting rising prices above all else. His confirmation could not come at a more pivotal moment. The Fed is widely expected to hold interest rates steady at its upcoming meeting, but here's what is remarkable: we are seeing the highest level of dissent within the Federal Reserve since 1992. Fed Governor Christopher Waller stated explicitly that the Iran conflict and labor market risks are keeping the central bank firmly on hold. New York Fed President John Williams separately warned that the ongoing war will slow economic growth while simultaneously aggravating inflation, the classic stagflation cocktail. Meanwhile, Elizabeth Warren publicly accused the Trump administration of wielding a sword over the Fed, raising questions about the central bank's independence at precisely the moment when credibility matters most. As he himself has said, monetary policy should remain independent, but the Fed must stay in its lane. The question on every trader's mind: will Warsh's inflation-first approach mean higher rates for longer, and what does that mean for growth stocks that have powered this bull market? Now to the commodity story that is reshaping the entire global economy. Oil prices are surging. WTI crude shot up 6.8% today to $107.11, while Brent crude has already breached $120 a barrel. Gas prices at the pump have jumped to their highest level since July of 2022. The catalyst is an escalating conflict between the United States and Iran. President Trump extended the Iran ceasefire indefinitely, but the market has drifted far beyond diplomatic hopes. Seized ships and vessel attacks in the Strait of Hormuz are pushing the ceasefire toward the brink, and fears of an extended conflict are dominating crude markets. This is not just an energy story, it is an everything story. Rising oil lifts inflation expectations across the board. Treasuries fell today as higher crude prices forced bond markets to price in a longer inflation fight. Mortgage rates, which had been stabilizing, are now facing upward pressure again ahead of the Fed meeting. The energy sector of the S&P 500 rallied sharply, but the broader market is caught in a bind. Energy companies win, but everyone else faces higher input costs and squeezed consumers. And that brings us to our third major story, one that central bankers around the world are now acknowledging openly. Stagflation is no longer a theoretical risk. The European Central Bank is confronting a direct stagflation threat this week, with policymakers debating whether to raise rates even as growth slows across the continent. In the United Kingdom, the economy surprised to the upside with 0.5% growth in February, but inflation remains stubbornly above target. The Bank of Canada held its rate steady today, with Governor Tiff Macklem explicitly warning that the Iran conflict is creating war-driven inflation while simultaneously slowing economic activity. Canada's February GDP came in at plus 0.4%, beating the 0.3% estimate, but the preliminary March reading suggests a slowdown to just 0.2%. In Asia, Samsung reported an 8-fold profit surge, beating estimates as the AI boom fuels an unprecedented memory chip crunch. Microsoft called for $190 billion in capital spending in 2026, driven by soaring memory prices and AI infrastructure demands. The Magnificent Seven are spending like never before, but the question is whether that spending will generate returns in an environment of rising rates and persistent inflation. This is the landscape investors must navigate: a Fed in transition, oil at multi-year highs, and a global economy walking the tightrope between inflation and recession. Now let's look at today's stock movers. Intel was the standout performer, surging 12.1% to $94.75 on continued optimism around its AI chip pivot and foundry strategy. Visa rallied 8.3% to $334.86 as consumer spending data remained resilient. Silicon Motion Technology skyrocketed 45.8% on merger speculation. On the downside, SoFi Technologies crashed 15.4% to $15.52. Its lending business missed execution targets, and the market punished the stock harshly. It is a stark reminder that in this environment, growth at any cost is no longer acceptable. With that backdrop, let me give you 3 stock picks for tomorrow plus one hidden gem under $35. For conservative investors, I am looking at Pfizer, ticker PFE, at $26.26. The legendary value investor Benjamin Graham, considered the father of modern value investing, would calculate Pfizer's margin of safety here. The stock is trading near its 52-week low with a healthy dividend yield above 5%. In an environment where oil is spiking and inflation fears are running hot, defensive healthcare names with strong balance sheets become essential portfolio anchors. Pfizer's pipeline extends well beyond its COVID legacy, with oncology and immunology drugs driving the next wave of growth. For balanced investors seeking both value and momentum, PayPal, ticker PayPal, at $50.94 deserves a close look. The stock rose 2.6% today and has been quietly building momentum. Peter Lynch, the legendary Fidelity fund manager who taught us to buy what we know, would recognize PayPal's story. It is used by over 400 million people worldwide, yet trades at a fraction of its pandemic-era highs. New leadership under CEO Alex Chriss is focused on profitable growth rather than chasing unprofitable volume. The turnaround is real and the valuation is compelling. For growth investors willing to embrace transformation, Intel, ticker Intel, at $94.75 is my conviction pick. Cathie Wood, the world's foremost innovation-focused fund manager, would see Intel's AI chip pivot as exactly the kind of disruptive technology bet that defines her strategy. Intel surged over 12% today, and this is not just a one-day story. The company is investing tens of billions into domestic chip fabrication, positioning itself as the cornerstone of American semiconductor independence. Yes, it is a turnaround play with execution risk, but the reward potential at current levels is substantial. And now for our under $35 pick across all channels. Pfizer at $26.26 fits the bill perfectly. This is the stock that John Templeton, Wall Street's greatest contrarian investor, would be buying when others are fearful. He famously said the time of maximum pessimism is the best time to buy, and few sectors are as unloved right now as big pharma. Pfizer offers a 5.2% dividend yield, trades at just 10 times forward earnings, and has a drug pipeline that the market is completely undervaluing. In Korean won, that is about 38,000 won, well under the 50,000 won cap. In Japanese yen, around 3,800 yen, under the 5,000 yen threshold. Looking ahead to tomorrow, keep an eye on ADP private payrolls data before the opening bell, followed by weekly jobless claims. The pending home sales index will give us a read on the housing market, and we get the second revision of Q1 GDP. But the real focus will be on any headlines coming out of the Strait of Hormuz and whether the Warsh nomination moves closer to a full Senate vote. Oil at $107 changes the calculus for every sector, every central bank, and every portfolio. That is your market close for Wednesday, April 29, 2026. For the quick morning preview, catch our shorts at 7 a.m. Eastern tomorrow. I'm Chloe, stay sharp, stay invested, and I will see you back here tomorrow. I'm Chloe, thanks for watching. For our morning preview, catch the shorts at 7 a.m. Eastern. See you tomorrow. Check our shorts for a 60-second highlight. That's all for today. We all become wealthy together.